What's going on with Google? What's going on with Alphabet stock? Stock is down around 25% since its highs back in July, and at the time of making this video, it's under $150. It has a market cap of $1.83 trillion and a forward PE of 18.5 times. Yes, a company like Google, Alphabet, is trading at a forward PE of 18.5 times. Now, year to date, it's still up 6%, so really not doing much. The analyst expectations for this year are as follows. Sales growth of 13%, followed by 11 and 10% year-over-year growth in the two upcoming fiscal years. EPS growing a bit faster than that. In fiscal year 2024, EPS is expected to grow 31.4%, then in fiscal year 25 and 2026, closer to 14% year-over-year growth. Right now, the average analyst price target sits 38% higher than the price we're at today, still sits at $204. And as I said, it's trading at a forward PE of just 18.5 times, which is much lower than its 5-year mean. If we look at price to free cash flow though, that's in the last 12 months, it is higher than before. And that's the thing I want to discuss later on in this video. It's trading at 30 times price to free cash flow last 12 months compared to 28.1 times. If we look at price earnings to growth, it's still very cheap in my opinion, just over 1. Google Alphabet is of course buying back a ton of shares. Free cash flow per share has grown throughout the years, but has not grown as much as before. It also pays a small dividend, has a dividend yield of 0.54%. So again, what's going on with Google Alphabet? Let's discuss that in this video, and I'll share my thoughts on the company, why I'm still quite bullish on Google's future, despite the talks of it being broken up. I actually did a video about that. If you missed that, it's going to be in the top right corner. Anyways, if you enjoy this type of videos, hit all the buttons, like, comment, subscribe, notification bell on, do all of that. We'd really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so number one, here is the headlines for, well, right now. Google faces new antitrust trial after ruling declaring search engine a monopoly. US prepares to challenge Google's online ad dominance. In a second antitrust trial that starts on Monday at the time of making this video, the Justice Department has called for a breakup of the tech giant, which it says controls the vast majority of online advertising. So in short, the Justice Department's second monopoly case against Google begins trial, or just began trial. Prosecutors allege Google abuses its monopoly power in the online ad market. Google's rivals, Meta and Amazon, could benefit if Google loses, which, funny enough, it's not like they are not giants and they are not monopoly in the areas that they operate. But okay, more on that in just a second. The trial may reveal how news organizations depend on Google's ad services. Google argues its services are chosen for their simplicity, affordability, and effectiveness. And I'd also like to raise some points, or maybe just ask a simple question. Who decided that today was the best time to go after Google's, let's say, monopoly? Today, when you have Perplexity, when you have ChatGPT, when you have countless of other chatbots and search engines popping up each and every week thanks to the new AI hype thing, right? When you have Meta, Amazon, Netflix, all the other streaming giants, Apple, all of them generating billions and billions of dollars in advertising, who thought that today was the best time to go after Google and say, oh, they dominate everything, everything belongs to Google, when clearly there are other companies that are quite successful in doing what Google is also doing and generating quite a lot of money from that as well. Now, of course, I'm not going to lie here. We all know that Google search is still the dominant thing. But how come there are other options out there? Of course, yes, they also pay billions of dollars to Samsung and Apple to be the default search engine. Okay, fine. But how come that even with all the other options out there, even with, remember the headline, ChatGPT is going to destroy Google's dominance, right? Even with all of that, how come nothing has changed? Clearly, it's the best and easiest option out there. Now, I'm not here to say that it's always sunshines and rainbows with Google and especially its search results. No, we've seen, especially in the last 12 months or so, a lot of controversy around Google. So, okay, I'm not going to defend that. But at the end of the day, it's the people that choose what they want to use. And they will probably choose the things that they're used to. They will probably choose the services that are easiest to use, cheapest, fastest, and just what they're used to use, right? It makes sense. It makes sense. It's one of the reasons why Apple is so successful as well. Yeah, you could say the Apple ecosystem keeps you locked in. Yes, okay, that's also true, which I'm waiting for them to go after Apple to open up the iPhone, the App Store, stuff like that. Maybe one day. Maybe that will push Apple towards more innovation, because what happens during that conference, no innovation, a new camera button on the new iPhone. Wow, congratulations. Anyways, going back to Google here. Who thought now would be the good time to go against Google when they can probably prove black on white that there are plenty of other options out there and that people are just using their services because it's the best out there? Is that punishable by law to have the best service out there? I don't think so. Moving on here, and this is a quick recap of what happened last quarter. Again, strong quarter overall, but here were the couple of misses. They missed on YouTube ads by 3.1%. Network missed by 5.6%. And by the way, Google Network revenue is down from a couple of years ago. So they can obviously use that as an argument as well. Subscription platform devices missed by 0.5%. Other bets missed by 6.2%. Other bets operating income missed by 8%. And then free cash flow, that was a big miss, by 40.3%. And this is basically how Google makes money, right? You've got Google Search, which is the big blue bar right here. Then you've got YouTube ads, Google Network revenue, Google subscription platform and device revenue, and Google Cloud revenue. Now, Google Cloud is growing quite fast. I mean, it's growing faster than the other two, AWS and Microsoft Azure, but it only became profitable not so long ago. More on that in just a bit. Now, Google Network revenue, as I said, this is the purple bar right here. The purple bar right here. And if you look at Q1 2022, it was at $8.17 billion. Right now, as we've just seen, it sits at $7.44 billion. So it's lower, to point out the obvious here. Now, going back to Google Cloud, this is a fast growing segment for them and a segment that is now becoming more and more profitable. Of course, it will take some time until they reach the levels of AWS or Azure, because AWS is on an annual run rate close to $100 billion and still growing quite fast. This is now at, $10.3 billion a quarter, so let's say $40-ish billion a year. Now, if this continues to grow at this pace or close to, you can understand that even if they lose a little bit from the advertising part or whatever, another part of their business, I think they'll be quite okay. And I'm not even going to talk about how YouTube is expected to continue to grow quite a lot, Google Pixel, the Android ecosystem, and the long-term bet that, Waymo could become a huge money-making machine. Now, we did have some positive commentary from Barron. So they talk here about Google's performance last quarter, generative AI. So they say here, while we are cognizant of the potential risk to the dominance of search, we believe that on the range of outcomes, Alphabet remains well positioned through its massive user distribution. 9 products with over 1 billion users each, long-standing AI research labs, which are DeepMind and Google Brain, top AI talent, and a solid cloud computing division in Google Cloud, and deep pockets for investing in AI. During the quarter, Alphabet also held its annual I/O conference, where it provided an update on its effort in AI, including Gemini. It's now used by 1.5 million developers. Model quality is expanding rapidly. Context window is now 2 million tokens of length. The new genomics model, AlphaFold 3, which I also talked about, I think a month or so ago, can predict structures of molecules and potentially accelerate drug discovery. New TPU 6 AI chips have shown a 4.7 times improvement in compute performance compared to the prior generation, and Gemini for Workspace is showing early data on a 30% increase in user productivity. Alphabet also has real value in assets such as Waymo, which are not factored into valuation today and are potentially included at a negative valuation as they currently generate losses, hurting EPS. 100% agree. We continue to believe that the current valuation of Alphabet presents an attractive risk-reward for long-term owners of the business and have therefore increased our position. I couldn't agree more. Now, the problem, or maybe the problem, because yes, it's true that if you compare Google to all the other big tech companies, it's true it's not that expensive at all. But if we look at Google from a free cash flow standpoint, you can see free cash flow is the blue bar right here. Free cash flow today is basically about the same as it was here back in, Q1 2021 or something like that? Yes, cash from operations, that's up. But free cash flow has not really improved much. Yes, buybacks are up. Yes, it's paying a dividend. But what has increased quite a lot, as you can clearly see here from the purplish bars, is capital expenditures. AI build-outs are not cheap at all. Now, of course, if Google Cloud continues to grow and continues to become more and more profitable, then these things make sense because at one point they will stop with the huge capex, right? It will go back to the usual $5-6 billion or so, not $13 billion. And then you'll see huge improvement in free cash flow. Although I probably expect to see improvements in free cash flow earlier than that. But yeah, just because right now free cash flow is not as good as before, and yes, free cash flow is at a level that was before where Google stock was also at $150, blah, blah, blah. I can understand that. But I do think that Alphabet, Google, and everything under that is quite stronger today despite everything that's happening right now around search. I know, quite crazy thing to say, right? But I think that the fact that the other solutions exist and Google search is still the most popular option out there says something about them. They've got YouTube, pretty popular, right? I think the most popular video platform on the planet. Continues to grow, and I expect it to become even bigger in the future. Waymo is a long-term bet. Either it works out or it doesn't. If it works out, it's $100 billion worth of revenue that will probably be generated in years and years to come, profits as well. Google Cloud. Google Cloud is something that is currently growing faster than its main competitors, AWS and Azure, and finally it's becoming more and more profitable as well. Should help the company. More discipline, cost cuts. Enough with hiring left, right, and center useless employees. Sorry to say that, but let's be honest, lots of these tech companies just hired for the sake of hiring. So, all of that said, yes, I think it's a buy the dip opportunity. Now, in the short run, these headlines, antitrust things, yes, it can hurt the stock. But at the end of the day, if quarter after quarter they can put in great numbers, doesn't really matter much. And again, the breakup, the sum of all parts, I think are worth more than $1.8 trillion. So, okay, breakup, shmakeup, we'll see what happens when we actually get there. Right now, if you look at the stock, it's under the 200-day moving average, literally in no man's land. But we do have a small gap to fill here from back in March, which, okay, could mean that we're going back down to $140 or so. We're not that far off. So keep an eye out on that. RSI is pretty low, but on the weekly, definitely not oversold just yet. So overall, that's about it from me in this video. You know my thoughts on Google Alphabet. I like it. Maybe you don't. That's fine. That's just my opinion. Like, subscribe to all of that, and I see you all in the next one. Bye-bye.